From the Center for Agricultural Profitability at the University of Nebraska-Lincoln, this is Nebraska Farmcast. I'm Ryan Evans, and I am glad to be joined again today by Shannon Sand to discuss IRS Section 180 and how it might allow for tax deductions when agricultural land is purchased. Shannon is an agricultural economist and educator with Nebraska Extension and the Center for Ag Profitability, and she is based in North Platte. We'll break down what exactly Section 180 is, who can potentially benefit from it, and how landowners can work with their tax professionals to utilize it. Thanks for joining me again, Shannon.
Thank you for having me, Ryan.
So we should point out this article is available on our website at cap.unl.edu. It's in the podcast notes, wherever you might be listening. So if you can just start us off with explaining what exactly is IRS Section 180 and what types of expenses does it apply to for ag landowners?
Okay, so IRS Section 180 is a code within the IRS that has provisions which may allow landowners of newly acquired land to treat the residual fertility present in the soil at the time of purchase as a deductible cost for ag production. So it's very specific use cases. So it is going to be really important to talk to your tax professional prior to the purchase of the land, ideally, about whether or not this may be a possibility.
And can you give us an idea of the key requirements or eligibility criteria that someone would have to meet to be able to claim a Section 180 deduction?
Okay, so generally you want to file it in the tax year the land is purchased. However, there are some opportunities, and again, the thing with taxes is they change every year, that exist for filing an amended tax return that could be filed up to 3 years after the land was acquired. But again, those are very special use cases. You would really want to talk to your tax professional. Ideally, soil sampling should be conducted prior to or shortly after the land is purchased and prior to any additional fertilizer applications. So again, there's a lot of very specifics associated with 180, but I've had 2 or 3 people contact me with questions about it. So yeah.
And so if one of those landowners who recently purchased farmland, they call you, can you walk through what the typical process of documenting and claiming Section 180 deduction would be on their taxes?
Sure. Okay. So there's a question I'm going to ask myself beforehand is this land at a premium? If the answer is yes, there is a possibility that you could claim it as a Section 180, because generally that premium land means there's additional fertility, which again, potentially you could use as a tax deductible. If you rented the land prior to purchasing, the answer is no. So again, I feel like this one has so many, it's very specific about the use case that it can be used for. So, if you rented it prior to purchasing it, you cannot take advantage of Section 180. So now I don't know how far back that look period is on that. So you would, again, really want to consult your tax professional. But I read the actual Section 180 and it didn't say anything about a look back. It just said that if you had rented it previously, you were not applicable to take a Section 180 deduction. So again, everybody should talk to their tax professional, basically. But if you never rented it and you just bought the property, then absolutely you want to talk to your tax accountant and an agronomist. Again, I would talk to the tax accountant and see if it's a possibility. And then you want to talk to an agronomist to see, again, what all needs to be done for it, because there is specific sampling that has to be done in order to do the calculation. And so it's just really important to try and get those samples and contact that agronomist and talk to your tax professional prior to purchase. So because you're really wanting to get those samples so that you know what the residual fertilizer supply is, the excess amount can be measured by grid sampling. Basically, a buyer can anticipate that grid sampling, and I pulled this from University of Illinois, so it could be very different in Nebraska, but their estimated cost per acre is $4 to $8. Agronomists and agricultural soil testing labs follow certain guidelines and procedures that they can use to determine an average base or soil fertility for various soil types. And basically, once the grid soil samples are obtained, the fertility levels of those samples are compared to the base fertility guideline levels for particular soil types to establish the amount of excess fertility on a tract of acquired farm real estate. So like I said, very specific use case samples, and there are very specific requirements that have to be met in order to take advantage of this. But yeah.
And it sounds like that. And if somebody's considering if it's worth the trouble to go through this, do you have an idea of how much of a tax deduction that a qualified landowner might be able to receive then through Section 180 and how that's calculated?
Yeah. So for example, let's assume that the farmland purchased is $8,000 an acre, and an agronomist pegs the excess fertility at $4,000 an acre. Comparable land in the area without excess fertility sells for $7,000. So when the $4,000 per acre for excess fertility is added to the land without excess fertility, that total is $11,000. Thus, the land is 63.6% of the total value, and the excess fertility is 36.4%. So the purchase price was $8,000 an acre. 36.4% of the amount of that is $2,912 per acre, or $2,912 per acre, I should say. So that will be the amount the IRS is willing to accept as the deduction for excess fertilizer supply, not the $4,000 an acre that the agronomist determined. So, and I did pull this from the Illinois Tax School. They have several examples available. So yeah, they have all the calculations and stuff.
So certainly not insignificant.
No.
What advice?
$2,000 an acre is a lot. I mean, if you think you're going to get $3,000 an acre for tax deduction, and it's, 1,000 acres, that's a lot of money. I mean, you're going to probably max out your tax deduction before then, because I've seen several numbers and it changes every year, but I think it was like $1.5 million was kind of the max for that. But again, you'd want to double check with your tax professional. So yeah.
Perfect. And if ag landowners are considering this, Section 180, how it could benefit them tax-wise, what's your advice to them? I bet number one is consult your tax professional.
Yeah,
can't be said enough on this.
Literally what I would say. But also to obtain data for established base fertility for the type of soil on the land you're considering purchasing, so that you have comparable tracts and comparable soil types. By establishing the base soil fertility, the actual soil sampling on purchased land will reveal whether excess fertilizer is present. Another thing that is important is that, again, soil sampling should occur prior to taking possession of the land. So the biggest thing is, if you think you qualify for that 180 section, is, again, like you said at the beginning of this question, talk to your accountant. And then if they think it's a potential, talk to an agronomist, because you're going to want to do that grid sampling and, again, get those base fertility samples. And that's not free or cheap, because $4 to $8 an acre, again, if there's no excess fertility, you lost money that way. So, really think about that. But yeah, I mean, it also could be a $2,000 an acre tax deduction, which is a really good one. So, yeah. It's a case-by-case scenario, I'd say.
But bottom line, it sounds like due diligence is very, very important in this case. You don't want to jump into something that is not going to benefit you in the long run. So,
no. And I would very much consult professionals, because we're talking about not insignificant amounts of money. Again, $4 to $8 an acre. If you buy 1,000 acre tract, that's $4,000 to $8,000. And again, granted, the potential tax savings are great, but you really want to have a good idea. And a lot of people do when they buy the land, they know or have a general idea. So, yeah.
Well, great stuff from Shannon Sand, agricultural economist with Nebraska Extension and the Center for Agricultural Profitability. cap.unl.edu is our center's website. You can find her new article on Section 180, along with a plethora of other financial resources. cap.unl.edu. Thanks, Shannon.
Thank you.
Nebraska Farmcast is a production of the Center for Agricultural Profitability at the University of Nebraska-Lincoln. For the latest research-based information and education resources to manage your farm or ranch operation, visit our website at cap.unl.edu. That's cap.unl.edu.